It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, May the 12th, 2016. Another exciting newsletter for you tonight. Don't forget, no newsletter on Friday evenings. This is the last one of the week as we wrap up what has been an incredible week in our trade room. Hope you guys had a great week with me as well. Tonight, we got crude, S&P, gold, and euro. Markets are moving pretty well going into retail sales Friday. Crude oil has a nice large range to work with tomorrow, while the S&P, gold, and of course the euro all have some great looking trends to use in Friday's session. We get a great plan and a very active Friday coming our way. Looking forward to a good day tomorrow with our students in our trade room. Before we jump into the charts and take a look at the strategies for tomorrow, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, that's wonderful. Make sure you subscribe to the YouTube channel. But the only place to watch the full-length version is here at Sideways Markets. There's a link in the description of the YouTube video that'll take you over here to our blog. While you're here, don't forget to grab a free pass to come out and attend our trade room as a guest. Grab that free pass in the upper left-hand corner. Also, don't forget to join the mailing list. Lower left-hand corner, give me your name, your email address, and then make sure you check your inbox. I'm going to send you a verification email, and then I'll email you every evening when the nightly newsletter goes live. Also, right below the video tonight, you can download all the charts you see me using in tonight's video. Follow that link below the video on the blog, and then over on the right-hand side, you're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. Join the trial membership on the right-hand side, and please don't be bashful. If you have any questions about anything we discussed here today, including our beginner, intermediate, or advanced membership packages here at School of Trade, use the live support button over on the right-hand side. You guys ready to rock and roll? I hope you hydrated this afternoon, right? Bring that helmet with you to work today. It's going to be a busy one. Tomorrow we got Friday, May the 13th. Tomorrow is Retail Friday. Always a pretty busy Friday. We have these days during the month where we know kind of what to expect. Some reaction Mondays. Today we had jobless claims on Thursday. Tomorrow, though, the second Friday of the month, we got retail sales. Nothing really too big, not to discredit my good friends down in New Zealand, but we don't expect the retail trade from the Kiwis to do too much damage here. We do have some major news, though, from our friends down in New Zealand at 6:45 p.m. Eastern Time. We don't expect that to be too much of a market mover as we go into Friday, May the 13th. Now that I checked it, that is it says Friday the 13th. It is, oh, heck. I better make sure to, you know what to do on the Friday the 13th. Bottom line, let's keep going. 2 o'clock, 4 o'clock, 5 o'clock. Those are the news events tomorrow morning in the London session. 2 o'clock, 4 o'clock, 5 o'clock. The big one tomorrow morning will definitely be that 5 GDP flash right at 5 a.m. tomorrow. But I'll tell you, though, the big news tomorrow, though, will be in the U.S. session at 8:30 a.m. We're getting the PPI and, of course, the retail number tomorrow morning at 8:30 a.m. Love Retail Friday because we always tend to get a nice shot in the arm. Sometimes Fridays can be a little bit of it's always an early in, early out, but sometimes Fridays can be a little bit low volume. Especially these days with such volatility. You've either made a killing this week, right, or you got buried this week. So bottom line is we're looking forward to seeing a pretty good Friday session tomorrow. And when you see these charts coming out tonight, you'll see what I'm talking about. We get a lot of big ranges looking forward to tomorrow. So again, news in the London session, starting at 2 o'clock, 4 o'clock, and 5 o'clock. And then again, if I had to guess, I would guess the big market movers are going to be coming shortly after we open up our trade room tomorrow morning at 8:30 a.m. Eastern Time. Don't forget, Fridays are early in, early out. I do not recommend opening new positions in the afternoon session on Friday. You can leave positions open. Just make sure you protect yourself with that stop loss because we got big news coming out of China over the weekend. If you're looking for a good time, though, Sunday night, right? Sunday night going into Monday is probably going to be not too shabby with that big news coming out of China right on Sunday evening. We'll talk more about that in our newsletter on Monday evening as well. Got the plan for tomorrow. Again, early in, early out on Friday. Make the money, keep it in your account, and hit the weekend. Enjoy yourself. How about crude? Let's go crude, S&P, gold, and the euro. Crude is range bound. You got to call it a range, but there's a short-term bull bias this evening as the buyers recently trapped the lows and are now hunting for a retest of the highs tomorrow. But we have some overhead resistance in the way, which may cause the buyers to wait for a deeper pullback before this price finishes the move back to the highs. The day overall is clearly a range, with the sellers failing at the lows and the buyers trying to finish that rotation back to the highs with a recent bull channel that is now giving the buyers a chance to enter on a pullback. The buy targets are the recent high at 46.77, the measured move at 46.87, and then the high of the range at 47.02. We can expect to see swing buyers entering the market until price breaks below the battle zone at 46.19, and then we can expect to see sellers use that same range as resistance for a move back to the lows, where we'll then expect to see a bearish measured move tomorrow. A lot of potential here right now. First of all, let's talk about the big components on the chart right now, upper left-hand corner. The first one is the range. You know, when you look at it, it definitely doesn't have the perfect feel of a range, but when you look at what happened down here, if you're a student of mine here at School of Trade, you know what that means. It's a trap low, right? It's a double press. It's a two-try failure. You get the point, right? If you're a student here at School of Trade, you know exactly what that is screaming at you right now. And of course, that puts a big old bullseye right back up at the high of the range as sellers have tried and failed. Don't forget, the name of the game for a range is to buy low and sell high. The buyers had a chance to buy low. If we get back to the high, we look for a chance to sell the high. It's a pretty big range, so you'll obviously be able to trade long on the way up to the high, and then again look for that double top failure, right, and then back down to that low. So if you're a student of mine, you know what I'm talking about. Buy that low, sell that high. If we do finish the job up to that high, look for that double press, two-try rule failure, and then right back down we go. Next up on the list is the bull channel. The bull channel here is pretty important, right? The bull channel here is definitely pretty important. And ultimately, what this bull channel tells us is there's a big target back at 46.77. Right? That bull channel tells us there's a big target back at 46.77, and buyers are going to keep trying to buy those dips. The battle zone is here at 46.19 to 46.05, and before I talk about that, I want to talk more about what happened beforehand, because I want you to get a frame of reference what's going on right now. First of all, the bull channel, again, you need to be aware. The bull channel tells those buyers to buy those dips. Okay, so just keep that in mind. Now, look left for a second. Look at this big, strong move down. Now, I want you to put yourself in the shoes of the sellers at 11:45, 12 a.m. Eastern time this morning. You see this big move down, very strong move down. What are you thinking right now? You're thinking as that price goes higher, you're going to sell some here. You're going to sell some here. You're going to sell some here. The problem, though, is that eventually you need to admit when you are wrong. And if we get above that third, usually it's 2 to 3 big swings higher, which we have now, you're now looking for an opportunity to get out for a small profit. Basically, the sellers in the market here are hoping that this market goes up and then eventually comes back down, right? So they're selling into this, selling a little bit here, selling a little bit here, selling a little bit here. Now, what happens when we break above that next swing is now the sellers, well, they're trying to get out with whatever profit they can get. And that's where this battle zone comes in. Because now, at this point, a lot of those sellers are going to start peeling off their orders right about here. Okay, so once again, go back in time and think about it. You're a seller, you're scaling in, right? You're scaling in, you're scaling in, you're scaling in. Now you know you might just be wrong about that move back to those lows. What are you going to do? Are you going to take one big lump and get out? No, you're going to say, well, the market's moved higher. It's going to pull back. Where's my average entry? My average entry is going to be somewhere right around here. Again, take the sell, divide by 3. Your average entry is going to be right around that 46.25 to 46.15 area. So what happens when sellers take their profit on a short position? They get long, right? They end up buying their way out of their short position. Now you can see why this pullback is so important, right? This pullback is so important because at the same time now, the buyers are doing the exact same thing. Buyers are buying here. They're buying here. They're buying here. They're buying here. Now, what's going to happen as the buyers buy this pullback, right? It's going to start to cruise higher. Once this happens, the sellers know they're busted. Whatever bit of profit they took at their point of entry, they better get out now, and it should really shoot back up. But the problem, though, is if it makes it below it. If we break below the battle zone right now is a 46.19 to 46.05. If we break below that battle zone, the same thing's going to happen to the buyers. They're going to have to get out of that trade, and the sellers will use it to their advantage on the opposite side. So, once again, sellers are on the verge of being proven wrong right now. If this buy zone holds, they will be wrong, and they will get out of these positions quickly, and you will see it launch higher, trying to go back to the targets at 46.77, 46.87, 47.02 are the ultimate targets, and possibly a blowover at 47.19. I think the big deal right now is this area right here. Because if I'm looking at this move higher right now as a short-term buyer, I'm thinking, perfect, I'll buy some right here, I'll buy some right here, and I'll buy some more right here. And if I'm wrong and price goes below the battle zone, all I have to do now is take my average entry, which is right about here, and get out right there. My target moves down to that, and I liquidate my position, and of course now price will fall. Think about what would happen if a buyer scales into this move lower, and then all of a sudden now they know they're wrong. What do? They start covering their behinds, right? And what they do is they put their targets right here. What happens if a buyer puts their target right there? They sell their way out of their position, and that results in that failure lower. So this whole area right here is a huge, again, I call it the battle zone for a reason. Because if they hold this battle zone, then that means the sellers, they get out by the skin of their teeth. And they're going to, and we should see this price launch. If we do make it below that battle zone, though, look for those sellers to use it on the opposite side as the buyers get caught on the wrong side, right, and price goes lower. Bottom line, if we hold above, we anticipate a price back to those highs. If we make it below, look for those sellers to use it as resistance on the way back down, hunting for that low, and then most likely a larger measured move in tomorrow's session, right? We don't quite know where that is right now. So measured moves on the horizon right now. Again, we really don't know where it will be, but look for that measured move down. Again, if those sellers can hold, they're going to use the opposite side of that as resistance. The buyers will be scaling in here. They'll be scaling in here. They'll be scaling in here. But if they're wrong, they're going to get out at average entry and price will collapse back down. Measured move, of course, you can see is a target back up top here at 46.87 as long as we don't make below the C point. All right, guys, I hope that all makes sense. Don't forget, we do this all together every day in our trade room. All right, I'm going to teach you all this stuff. Come out and see me here at School of Trade, and we'll walk you through the whole thing. It's pretty simple, trend analysis. We're going to talk a few more times about it here today because we have a bunch more trends to work with. The S&P 500 is also bullish in the short term, but the overall bearish sentiment tells us that swing sellers are likely scaling into this move as it pushes higher, and all they need to see are the buyers fail on the next pullback into the battle zone for a move back to the lows of that bear channel. The strong move lower this morning tells us that sellers are already in this move with targets at the lows at 48.50 and the measured move at 42.25. However, the most recent bullish move is not too shabby. It's quite strong, that recent bull move higher, which tells us that buyers will likely have their own plans of retesting the highs at 66.5 and 72.75. We're testing the battle zone right now for the bulls, and if they can hold the support, they will have a shot back to the highs. But if they slip below 55 and a quarter, we expect to see a move back to lows at 48.5. Here's a beautiful example of exactly what I'm talking about right now. First of all, we got a bear channel coming off that high.